I want to break this video down into different sections so I can respect your time even more so. In the comments, you've got timestamps there so you can jump around to that which interests you. Now, I spoke about trading using TVR last week, and the week prior to that, I was talking about trading the news by ignoring news. This week, we have non-farm employment change and unemployment rate, and we are going to implement the same trading plan this week by ignoring all fundamental news, always. Before we get into the trading opportunities for this week, I want to remind you that if you like this style of trading and want to trade and have positive results for your own trading, you can always hit the link below for our free members area, get immediate access to learning the language of the markets, grab my proven trend trade strategy, and you can prepare and take advantage of market moves too. It'll forever be free for you always. Let's switch over to TradingView here and then go over the lack of knowledge and experience and what is keeping the majority from consistent profits in their own trading. Just jumping right into it here. Just before I go to TradingView actually and pull up the pound dollar and the Kiwi dollar, those are the trades that I'm looking at. What I want to do here is quickly we're in a very interesting position right now. So what I've done here is I have a long opportunity, okay? So I'm in a structure-based trade. I bought the pound dollar towards the upside. This is on a 4-hour time frame. This is the trading account that I trade live in front of our private client group. The reason why I'm showing you this is I'm long here, but what I'm about to show you on TradingView is short. So right now, we're sitting at a Gartley pattern opportunity here on TradingView. Now I can't sell it because I'm already long, but I'll give you the trade idea that we're looking at for this week. So pound dollar, we're looking at a short opportunity in the form of a Gartley pattern. You see the W formation here, and then we'll jump over to Kiwi dollar because we're short on a trend continuation trade as well. Over to TradingView here, you've got the pound dollar. Now we recapped this last week. Every week we're coming in because this is quite a big trade coming off this pattern right here. We came down, we hit targets, rolled stops to break even after we took off half of our contract there. Now we're looking for a move all the way back down into a 618 right there. So it's quite a decent way of the way. That would be 285 pips for that move here. Now, as I showed you just before, I'm already long. Right? I'm already looking for a move towards the upside here. However, coming back to this example, if we jump down to a lower time frame on the 4-hour time frame here, you can see, as I mentioned, you have a W formation here as well. And just for the time being, I'm going to get rid of these two boxes, right? And just get rid of that. Right, so as we can see on the 4-hour time frame, we have this W formation here, and we're going to sell it right now in the direction of the trend. So we're looking for a trend continuation trade here on the pound dollar, and we're using a case for entry, pound dollar, the Gartley pattern, in order to sell. Okay, so here we have Fibonacci extension. So at the 786 and the 127 Fibonacci confluence, you can see that we're currently inside our sell zone. Well, we've come up into our sell zone right there. So all we need to do is grab a short position, and we're taking our entries at the Gartley pattern. So if we draw in the triangle tool, X to A to B, B to C, and then C to D right here. That's the Gartley pattern in front of us there. Right, so we have our entries at the 127 Fibonacci extension and the 786 confluence right there. What we want to do now is take the target and then drag it all the way down to our lows right there. Because remember, we're looking for a trend continuation trade target, but we're using the Gartley pattern as a case for entry to get involved. Remember, stops at the 113, which puts us above our highs looking left right there. So make sure that we're getting our stops above structure, looking left. And then we have our target 1 at a retest of the lows. So what we're looking at here is a 2-to-1 risk to reward profile. That's really good. Gartley patterns have a 50 to 60% win rate, and so does a trend continuation trade. Combine those together, we have a very, very good trade. What we want to do is execute our plan over and over again. So we're looking at this opportunity again. I'm already long on this, so in my other account, I'm not able to do that. But this would be the trade idea that I would be going for right now. Then we want to clone that because we always look for double targets, right? So target 1 is a 2-to-1, and target 2, if I just squash and zoom out here, what I'd be looking at is a Fibonacci extension, and we take it from our X to A right there. So our previous swing high to swing low, back up in. Remember, we're looking for trend continuation trade. So we come down, and we have another move up here, and we're anticipating that price action continues its move towards the downside. So Fibonacci 127, if I drag it like this so you can actually see it. 127 right there. Let's take our target 2, drag it all the way down to the 127. And target 2 is a 3-to-1 risk to reward profile. Again, very, very good trade idea here. We'll keep an eye on this and see how it goes throughout the week. One or two things is going to happen from here. It's either going to hit our targets, which is good, or it's going to stop us out. Other than that, all we do is have to show up every single day and trade the plan regardless. All right. Jumping over to our Kiwi dollar, as you can see, I've already done it here. But we have, if we take our starting point looking left, right? We have our swing highs up here, then we come all the way down, then we come all the way up, then we come all the way down, don't we? So what do we do here? As price action comes down, we drop in a line tool looking left, okay? So if I look left here, you can see that we have structure right there, structure here, almost touch it there. Then we get a break and close below right here. So a little bit of consolidation. Then we finally get price action breaking towards the downside, a break and close below, okay, giving us a new lower low, lower close. Price action then comes all the way up, retests structure looking left. Previous support becomes new resistance. Then price action comes all the way back down, doing what? As we look left, we get another close below. A lower low, lower close once again. We just follow the trend continuation trade rules, right? As we get a move back up into, after a lower low, lower close, as we get a retracement back up into the structure level, we're looking to sell. Yes? Where are we looking to sell to? Well, if you follow the trend continuation trade rules, your stops will always be above the cycle high. That is where it goes. Your entries are always at a level of structure right here. We come up, retest the highs, really good place to sell. Your targets is a retest of the lows, not all the way down here. Don't want to get too greedy with it. What you want to do with your entry stops and targets is set yourself up with the highest probabilities that you are going to hit targets and less likely to be stopped out. That's it. That's trading right there. We can do that over and over again. Then we're going to do incredibly well. Entries right here, stops above the cycle high, and a retest of the lows for target 1. And of course, as you can see, we've already got it in here, a Fibonacci extension from our previous high to low. So all I did was this, a Fibonacci extension from this swing high all the way down to this swing low and back up in right there. So for target 1, you have over 1.5 to 1. For target 2, you have over 2.5 to 1. And this is a very powerful trading strategy. Again, historically, the performance is it's 50% to 60% accurate. And all you need, remember to pay attention to this, all you need is a positive risk to reward profile. over time. So what do you see in front of you? And what do you see every time we do this, week after week after week? Other than the students in the private client group who see it every day in London Market Open. But it's the same process over and over again. It's that same process. It's taking this strategy and taking the rule sets so it has no subjectivity, going out and doing it the same way every single time, go back in history, make sure that it has a good win percentage over 100 trades. So you're just finding your average. And then what that will tell you is how many times you win when you're right, or how many pips you gain when you're right, and how many pips you lose when you're wrong. And if you end up with more wins than you do losses, you have more pips. And that's it. That's a positive expectancy. A PE above 0. A mathematical proven probability that you gain more than you lose. Guys, the takeaway from today is that is the steps. That's all. I said the other week, you pick an instrument you like. You pick a pair that you like. Euro dollar, 1 hour time frame. Take the strategy, go back in history every time it presents itself, track it. So make sure you do your back testing. Over 100 trades, what is your win percentage? That's it. If you're over half right, good to go. If you gain more than you lose when you're right, you have an edge. Then the only thing you need to do from there is take that and then prove it to yourself. You take it live, you trade it live, you replicate that which you tested, and you prove to yourself that, wow, that's all it took. That's all it takes. The problem is getting to that point. The problem is information overload. As I said at the start of the video, the problem is there's too much stuff out there that overcomplicates everything. You have traders, retail traders, who are trying to make this work. They want to do well. They are looking for ways that are going to bring in more profits for them, especially for their efforts. Genuine, hardworking individuals, that's you, who believe in themselves that they can make this work. And you were right, you absolutely can make this work. And it's not a lack of experience and knowledge. It's the fact that they don't know how to take all of that knowledge and put it into practice and implement it in the right way. Implement it in the way that is going to set them up for the highest probability of success in the shortest time span. Because nobody has taken the time to sit down with them and show them in chronological order to get someone from profits to consistent profits. It's not knowing the action steps necessarily. It's about knowing the right action steps that are going to get you the right results. Exactly what we just did here. So there's no point in learning a golf swing for 3 hours a day when it's the incorrect swing. So by the time you're playing for money, you slice that thing off into the river, it gets stuck in the water and your account sinks. Now you have nothing. It's practicing the right swing for 3 hours. So by the time you hit the ball and you are playing for profits, trading, you have the highest probability that your rewards are going to transmute themselves into their financial equivalent. Therefore, doing certain things in certain ways gives you certain results, right? So therein lies the problem though. What actions am I meant to be taking? So learning the correct swing, learning the correct action steps, learning the right way to do this is the very reason I put together that Star Classroom. This one is forever free and always will be, because everyone deserves to know how to read the language in the markets, how to identify trade opportunities, how to repeat those actions regardless of what is going on in the news or in the markets. Exactly what I just showed you right now. And then you can test it yourself. You set up your highest probabilities for your trading efforts that are going to reward you in profits. That's consistency. So to start off in the right way, to learn the swing correctly, I keep using that analogy because it's important that we make sure we do everything correctly first, because that is what's going to build the success habits. Start at step 1, learning to read price. Step 2, understanding structure. Step 3, understanding what constitutes a trend. Step 4, learning how to identify entry stops and targets. And step 5, implementing that for profits. That's it. So to get started doing that, I highly encourage you to join the members area below so you can set up your success habits now. We're halfway through the year. Question: are you 50% towards your goals? Let's stop the bleeding in everybody's accounts right now. Set up the right action steps so you can start doing it in the right way and actually get the results that you deserve to have. So we're looking at Kiwi dollar trend trade towards the downside. We'll see what happens with price action, see how this plays out. And then over on the pound dollar, we had this one right here. So we'll see how this plays out as well. Now, these don't always win, right? That's why it's important to know your numbers. Okay? But you want to be half right with a positive risk to reward profile. And I promise you, you will do incredibly well in your trading. Absolutely. Sold it here, looking for that target 1 and looking for that target 2. Right? So on pound dollar, we're using that pattern as a case for entry to get involved in the trend. It may blow up towards the outside. We don't know from here. But we have probabilities in our favor. And that is what trading is all about. All right. Also, if you want to sit down and have a tailored approach, a plan designed specifically for you, inside the members area, you can do exactly that. You can click here, set up a Zoom call with me. We can sit down and put something in place for you to make sure it's absolutely going to work in your favor. Or continue doing what you're currently doing and getting your current results. And if I know the majority well, which I do, keep losing money, keep bleeding the account, and keep getting the results that you don't deserve to have. And until we change that, nothing is going to change for you. Every day without a plan is going to be painful. But every day with a plan, you know you are going to be on the right track. And that's exciting. Let's do that today. Because if I can help other people do that, and I can do that, and everyone's getting results by following those simple steps, and I'm continuing to help traders around the world over and over, there's no doubt in my mind why we can't replicate the same results for you. I believe in you. I just need you to believe in you too. Let's move you to where you desire to be. And that's a consistently profitable trader. All right. Until next time, be safe, enjoy life. Thank you so much, and I'll talk to you soon.